This is an educational example based on my personal approach. Results vary widely, and nothing here guarantees profit or future performance. Hello, everybody, and welcome to the Trading with Ashley show. It is a cold, wintry day where I live, but that did not stop me and my sweet Sadie girl from coming out here to try to help those of you that are wanting to look at some potential ways to reduce your taxes, but keep exposure to some of your favorite stocks. Now, most of you are aware of the wash sell rule. Basically, if you are dealing with taxes and let's say you sell NVIDIA for a loss, you cannot turn around and rebuy NVIDIA within the next 30 days and still qualify for the loss. But there is something you can do. You can look at the ETF component to your favorite stock and then regain your exposure that way. And so I've done a lot of homework for you, and I have gone through some of the most popular stocks for retail traders, and I have looked at the component in the ETF that you may want to repurchase. You can do that right away, and you can regain exposure to that stock. I've even taken it a step further, and I've added a correlation score. Now, we're going to look at these together so that you can see how this ETF moves with your favorite stock. And this might be a way for you to enjoy taking some capital gain losses off of your stock, but not losing that precious exposure that you want to that sector. So we're going to go through this together, but I want to qualify this by sharing with you, I am not a CPA. I am not a financial advisor. I have taken advantage of what I'm about to share with you, but you always want to check with your local CPA and ensure that you are following the laws of your local state and government. Let's go over what the IRS defines as the wash sell rule. You cannot claim a tax loss on a stock if you buy the same or substantially identical stock or security within 30 days before or after selling it. That is a 61-day window, 30 days before the sale, the day of the sale, 30 days after the sale. If you happen to purchase the same or substantially identical security in that window of time, the loss is disallowed for now. Why does this rule exist? Well, the IRS wants to ensure that they prevent investors from selling a losing stock, claiming the tax loss, buying it right back the next day, hence keeping their exposure and also getting the loss right now for it. The IRS wants the loss to reflect a real exit from the position. Now, it's important to note that you do not lose the deduction forever. The loss is postponed but not eliminated. The disallowed loss is added to the cost basis of the replacement shares. When you sell the replacement shares in the future, then the loss becomes deductible at that point. If you want to avoid a wash sale, be sure that you do not buy the same stock 30 days before the loss sale, buy it back within 30 days after, buy options on the same stock, buy ETFs that are substantially identical. Do wait 31 days to rebuy. Do buy a similar but not identical stock or ETF. And just a little side note, the wash sale does not apply to crypto, futures, or Forex. We're going to look at each stock. We're going to look at the ETF counterpart, and we're going to go over the correlation. Now, I want you to understand how the correlation is going to be calculated. I will be using something called the Pearson Correlation Coefficient. Now, I know if you look at this formula, it's a little intimidating, but basically what it does is it takes the daily percent returns for stock A, the daily percent returns for stock B. It's going to look at how often they move together in the same direction. How closely related are they? If the score is a 1, that means they move almost exactly in the same direction. If it's a 0, there's no meaningful relationship. And if it's a -1, that means they move the opposite of each other. So that will help you as we are going through this exercise. The first one we are going to discuss is NVIDIA. Now, some of you have NVIDIA and you've seen the stock buoy up and down, but if you're sitting on a loss, you could tax loss harvest it. And then if you want to buy the replacement, let's go look at SOXX. It's the semiconductor ETF. It does have a high correlation score. If you go to a site like Yahoo Finance, you can compare these two together. If you look at NVIDIA in the blue and then you look at SOXX in the yellow, you can see most often they do trade together. If you look at the 6-month time frame or the year to date, you should get a pretty good idea on how these move together. Looking down here on the yearly chart, you can see if NVIDIA is up 36%, SOXX has gone up 42%. So this would allow you to keep exposure to NVIDIA even if you're tax loss harvesting. Next, let's go look at Palantir and its potential counterpart for a correlation. Now, the counterpart for Palantir is IWP, and the correlation is not as strong. It's 0.55 to zero point 0.7. Let's look at it together on Google Finance. You can see right here in the blue is Palantir Technology. This is a 6-month chart. And you can see right here, IWM is the yellow. And IWM has only moved up 3%. However, Palantir has moved up 36%. So if you decide to diversify into IWM, you won't get the massive growth, but you won't get the massive pull down either. It's always a risk to reward dynamic, but this shows you a potential replacement. If you are tax loss harvesting with Palantir, you can also look at the fund VUG. It's a Vanguard fund, and I really like the Vanguard funds. This one you can see has a stronger correlation. Looking at the 6-month chart, you can see right here 36% upswing for Palantir and almost 17% for VUG. Now we're going to look at two very popular stocks that all of us watching this channel love to trade. It's both Robinhood and SoFi. And look at their correlation over 6 months. This is very strong. They track very similarly. They are both in similar industries. So you have Robinhood that is primarily the trading platform, and you have SoFi that is primarily the banking platform. But SoFi is now getting more into trading, and now Robinhood is getting into banking. So it's interesting to see their correlation. So if you have losses on Robinhood and you want to pick up SoFi, you'll have some similar exposure, or the opposite is true as well. If you have losses on SoFi and you want to pick up Robinhood, it looks like you can do that just fine. Now let's discuss Amazon. I know several traders have Amazon and they might be sitting on a loss. If you want a good counterpart that has a decent correlation, look at ticker symbol MGK. It's the Vanguard Mega Cap 300 Growth ETF. Let's look at it together on Google Finance. Here they are side by side. You can see right here, Amazon, if you're looking at the 6-month chart, it's had a 10% growth this year. And MGK, well, it's had an 18% growth this year. So if you wanted to tax loss harvest Amazon and then you wanted exposure, you can go ahead and consider picking up MGK. Another one to consider tracking with MGK is Meta. You can see right here, if you're looking at the year to date, 12% for Meta and then 21% for Vanguard Mega Cap. And one more to compare with MGK. This kind of covers all of them, doesn't it? You can see right here, Netflix is in the blue. It's had a 16% increase this year. And then there's your Vanguard Mega Cap at 21%. Let's take a look at our major indexes. If you're looking at QQQ, and I'm sure a lot of you have exposure to that, if you want to look at a counterpart, it's another Vanguard fund you may want to consider. Ticker symbol BGT, and you can see here it's almost a perfect correlation. It's about 0.8 to 0.9. And look, if you're looking at a whole year, 19% for QQQ, and for VGT, it's right here at 18%. Finally, let's take a look at the SPY. If you have shares of the SPY and you want a tax loss harvest, what is a good counterpart? Consider Vanguard Total Stock Index Fund, ticker symbol VTI. When you put the two together, you can see the strong correlation. If you look at them year to date, 16% for the S&P and 16% for VTI. I hope you found that eye-opening and helpful, and it gives you a few ideas. I also hope you are subscribed to my channel. If not, I want you to stop right now and press that subscribe button so that I can jump into your inbox on a regular basis. Remember, if you're with me, Trading with Ashley, there is no trader left behind.